All right, welcome back, guys. So we're back in with 160 to 1,000, and I'll give you guys an update on where the equity's at. Before I do that, let's get into a quote. I haven't looked for one yet, but I'm always highlighting through the books as I'm reading. So let's go with let's go with this one. So adapting yourself to the trading environment. The first step in this process of adaptation is recognizing the need to adapt. If you can't manipulate or force the markets to change in a way that suits your needs, then you will need to learn how to change yourself to suit the conditions. So, what I take from that quote, hopefully you guys can think of something as well. And if you do think of something, drop it down in the comments from what you got from this quote. But what I got from this quote is when Mark Douglas mentions to adapt yourself to the condition of the market is instead of full porting your whole entire trading account, like the entire equity that you have, it makes sense to be prepared for the conditions that could happen, which would be minimizing your risk at instead of 100%, you'd risk something similar to what I do, 5%, or if you want to risk, 1 to 2% or 0.25%, then that's personal preference. I'm gonna go with 5%. I'm typically on average, I would say 5 to 7%. I try my best not to do 7%, but if it's something like gold and it's like a 1 to 10 move and the spread is, I wouldn't say the spread. Maybe my entry is giving me yeah, it's a 1 to 10 risk to reward, and I can't lower my lot size just because the smaller your account is, the lowest lot size you can have is zero point zero 0.01. So if I have no choice but to do the, risk 7%, I'm gonna go for the 7%. Other than that, I'm not just going intentionally with, hey, I'm gonna risk 7% on every trade. It's a conditional situation to risk 7% or 6%. So yeah, I am consistent with risking 5%, but again, depending on the situation. So that can also fall in line with adapting yourself to the condition of the market. Um, yeah, but overall risk management is key. So you don't want to like, for example, last trading week, I wanted to go into this UK 100 trade, and I did enter, but it took me a few minutes to say, even though I think I might have taken either some partial profits or I might have even lost a little bit and cut my losses short. But for something like UK 100 on a small account, you're in a even with a small stop loss, the spread is high. I guess brokerage also depends on the brokerage you're with, but just personal preference. I did not want to adapt myself to risking 14%, and that was on a zero point zero 0.01 lot size. So that would be you positioning yourself, which is also similar to condition, adapting to the market is if you just step away from the market. If you just think objectively instead of emotionally, then a lot of times you'll be able to respond in a better way in the market. And that's almost like a universal statement because it's not just trading that you are able to adapt and position yourself to where it makes more sense objectively rather than emotionally. So that's my take on the quote. Let me know again, comment below what you guys think. Um, this video is going to be mainly about 100 to $160 to 1,000. So I'm gonna start sharing my screen now, and first what we'll do is we'll look at the account's equity. So I'm gonna share the account's equity. Here is my Trade Locker account, and you guys know that I have two different accounts. This account I might have started maybe late last year or early this year, January, and I'm I'm gonna show you guys a TradeZella account so that you guys understand more about this account. It's just an account that I've been using and just literally learning from. I've been learning about myself as a trader for the last 6 months. So starting January, the last 6 months, I've been learning more about myself, how I trade, what works, what doesn't work based on my strategy. And it's simply coming together at this point, which is why you're able to start seeing the profits um now. And you can see that instead of 160, our balance is at 300. So we've almost doubled the account over the past 1 to 2 weeks, because I know we did have a winning week the previous week. This last week that just passed was a $70 profit. If you look at this month, it's a total P&L of up 112. And then if we go to just this week, you can see it's $70. So if I'm not mistaken, we might have made $30 last week, and then this week might have just been 70, as we can see here. But yeah, you always want to make sure again your potential profit is much higher than your potential loss, just in case. Keywords, just in case. All right. Um, let's go into TradeZella, and then I'm gonna have a second video that I'm gonna create right after this. Today's July 5th. I'm gonna schedule the second video to go out on Sunday. Um, the Sunday video is gonna be scheduled to review my second account that I created, and I'm gonna also discuss what trades that I'm gonna be preparing for this upcoming week. I think this week might actually be better than last week. And last week was great. Like I don't really have any complaints about last week. But we can now see the equity curve starting to increase. And we can now see that we're having back to back to back green days. Last week, wasn't too bad. And then this week is even better. So now we're starting to see that uptick because of how we've been minimizing our risk and maximizing our rewards. So we're standing in front of the law of probability, which has been working. So if it's working for me, it should obviously work for you. If you guys want to take a look at how I've traded, this is a glance of how I've traded. Look at the risk to rewards. You can see 1 to almost 3. I'm not sure why it was 1 to 2.4, but as you can see, 1 to 2.4, 1 to 7. I might have entered and then just exited for whatever reason. I think I discussed the reason why I came out of this on my previous video. Euro USD, I did also discuss why I came out of this on a previous video. This is the UK 100 trade that I told you I took profit, but I it just didn't sit right with me to risk 14% because that was a point oh 0.01. I was on a point oh 0.01 lot size. I couldn't go any lower to minimize the risk, and yeah, it would have been a really good reward, but the risk was not worth it. And you could see CAD JPY. So as you can see, I'm making sure that my profits are much bigger than my losses. So that's been a huge paradigm shift for me, and it's working for me. So again, it should work for you. And then you see there's two. So I got two trades here that were both in profit, and then two trades here that were both profit. Then we've got, I use the fib retracement a lot, honestly. Um, Where's the UK 100? I guess I deleted my markup, but yeah, I mean, I would have probably, I might have, yeah, I probably would have got stopped out anyways because I'm pretty sure my stop loss was above this high. Price dropped down, and then I probably closed profit right here because of the amount of risk that I entered with. I entered with like 14% risk, which goes against my trading plan. So it's never too late to cut your losses while you're in a trade if you find that it goes against your trading rule. And I think as traders, we all know when we're going against our trading rules, most of the time, not every time. I would say it makes 100%, 110% sense to fully know when you're going against your trading plan. I think we all know. And if you don't know when you're going against your trading plan, then I think you should reevaluate your trading plan. Just like I did, this is my trading plan. It's almost like I created my own index card, but I just cut paper from a book, wrote down my trading plans, and then taped it together and doesn't leave my desk. So, I mean, I can walk around with it, but I really don't even go anywhere. So, really doesn't matter. When I'm sitting in front of my desk, that's when I mark up. And then when I'm marking up, this is like, I remember everything from this. So, it's also something tangible that I can touch. So, I can touch my trading plan, which gives me more confidence in my trades that I take. But yeah, I'll do this markup on the video for Sunday, and I'll schedule the video for Sunday to drop. So be prepared for that. That is pretty much it for this video. I just want to give you guys an update on where the account's equity is at from 160 to $300 in equity, which is, I can look that up. I have an app for that. So from 160 to 300, that's an 87.5% increase. Like within the matter of 2 weeks, because again, I started at 160. I had to refresh and start back fresh at 160 about 2 weeks ago. Last week was about a $30 profit. This week was about a $70 profit, which means that within the matter of 2 weeks, we've gotten 87.5% returns, almost 100% returns, which is, in my opinion, better than real estate. And I said that months ago. That type of return on investment is better than real estate, and it's also liquid because you can just withdraw it typically the same day. And then what else? I mean, yeah, you really don't see returns. I mean, it's better, you get better returns as an 87% return in the matter of 2 weeks. That's better than the insurance industry. That's better than the real estate industry. And I just honestly don't know any other industry that gives you 87% returns on your investment within a matter of 2 weeks. I'll educate you guys more or help you guys understand more about the second account on the next video. And I'm also gonna put out my ideas, do a weekly markup for next week on what I anticipate that'll happen next week. The US dollar this past week has been bullish. And I'll talk a little bit more about that again on the next video. So I hope you guys enjoyed this video about the 160 to 1000. It's going great. We're about, what are we, 30% there? I would say from 300 to 1000 gives us 200, or no, from value. We'd have to make 23, 233% more than. on the $300 account that we have now. So what is 300% of 1,000? It's 30%. Okay. So that means we're 30% there. We just need 70% more, excuse me, to get there. All right. So hope you guys enjoy this video. Like, comment, subscribe. Let me know what you guys think about that quote. It was mainly about adjusting or adapting to the conditions of the market. Simple example of that could be NFP, non-farm payroll, CPI, FOMC. If you're somebody that is familiar about the volatility that gets dumped into the markets for FOMC, CPI, NFP, then that's a condition in the market that happens that you're familiar with. And if you're not comfortable with trading around those times of news like that being released, then you can adapt and just sit out on those types of moves. That's simply what I got from that quote. So comment what you guys gained from that quote. And then if you guys want to also take a look at the trades that I'm going to be taking throughout the week, I'm always updating the trading community on when I'm getting in or when I'm getting out of a trade. So feel free to join the Discord. The Discord link is going to be in the bio right down below. So thanks for watching, guys. Hope you guys enjoyed your 4th of July. It's July 5th, and a reminder, I'm going to drop a July 6th video for tomorrow, which is Sunday, and it's going to be about the trades that I'm potentially going to take throughout this week. So again, thanks for watching and see you guys in the next video.